In this video, we'll be taking a look at future analysis to get prepared for the week ahead. If you love the content, please like, subscribe, and leave your thoughts in the comment section down below. If you're interested in learning to read Forex like professional, check out our complete Forex course on Udemy. I have the link attached in the description below as well. So we'll start with the gold chart on the 1 hour time frame. And last week we had this massive dump all the way to this area of value. I kind of missed this trade opportunity to go long on the bounce because I was waiting for price to get a tap into our moving average. So remember, I used the 200 EMA and SMA to track the trend for gold. And while I was waiting for price to get into these moving averages for a good bounce, we had that bounce from these price levels around this area of value. So I missed the opportunity to go long. Right now, we seem to be consolidating within this range, right, or trading within this range. So a good support level, good resistance level. So first bullish case scenario would be hoping that we get a drop back into this area of value and followed by a bounce. So if this happens, then I'm going to look for opportunities to go long around these price levels. So hopefully that would see the moving average creep up a little all the way to this area of value, coinciding with this area of support in line with this trend line we have over here. So this will make up for a very good opportunity to go long. I'm going to go straight in after the bounce. My stop loss will be placed under the moving average or under this area of support, and first take profit target is going to be around this highest resistance level, and I'm going to trade the rest of my positions to go higher for a breakout. So alternatively, if you don't want to go long on the bounce, if we do get a reversal from current price levels, so that could mean putting up the trend line like this and giving you some sort of a pattern. So this will turn out to be a falling descending triangle, right? So descending triangle with a potential bullish breakout. So a bullish breakout from this descending triangle would give you an opportunity to go long, which would mean going long at a breakout from the descending triangle. So after the bounce of the moving average, and your stop loss can be placed underneath the consolidation that leads to that breakout from that moving average. Then your take profit first can be at the resistance level while you trade the rest of the positions as we go higher. So this is only possible if we get a rejection from current price levels, so sending the price of gold downwards. But what if we don't get that move to the downside and gold just keeps gaining momentum and keeps going higher? What I'm going to watch for in that case would be a move into this area of resistance, some sort of a small consolidation followed by a good breakout. So if this happens, then I'm going to go aggressively long over here after the breakout from this area of resistance. My stop loss is going to be placed underneath the consolidation leads to the breakout while I trail my positions as we go higher. And the typical take profit target for this would be around 500 to 1000 pips, because if you take a major price movement from these highs all the way down to these lows, so this area of support, and navigate that after the breakout, this will give you a potential target of approximately 1200 pips, as the case may be, which would be a decent risk reward ratio if this plays out as I expect. So either of these opportunities is going to play out as I've explained. So either we're going to get a rejection from current price levels, giving us that lower high, going for another sweep of the bottom before we go higher, or we go straight up into this area of resistance, get a small consolidation followed by a breakout. The same thing happened here. So last week I talked about how there's a good chance we get that small or slight consolidation in this area of resistance for us to go for a good breakout. So this happened last week. So last week we got here, had this consolidation, had this good bullish breakout on Monday. So that was last week, and you can see we had a massive price movement to the upside. So like this all the way to this highs was 1500 pips, decent trade opportunity in my opinion, and this is something similar I'll be watching out for over a year to play out. If it does play out, I'm going to go long and trail my position as we go higher while I reduce my positions as we go higher, right? That's it briefly for this week's analysis on gold. If you have questions, please leave them in the comment section down below. Moving on, we're talking about crude oil. So crude oil, last week we also talked about the possibility of price getting rejected by this area of value, but we had a brief sweep of these highs, so trading above this area of value, grabbing liquidity, and then falling short. So I've always been bearish on crude oil, so it was no-brainer to see this opportunity, giving rise to a descending, a bearish continuation, a bearish flag. Yeah, so this pattern over is a bearish flag. So you have a nasty move to the downside, you had a consolidation, so this is your bearish flag, and you go short as a bearish continuation when we get our breakout. So I went short here after we took out this trend line and rode the price all the way down to this price level. So probably 300 pips I cut from this. Right now, it's almost impossible to look for an opportunity to go short in continuation of the current price movement. But what we would be watching out for would be something like some sort of a pullback, right? A consolidation, a bearish continuation pattern, of course, similar to what happened over here, followed by a bearish breakout. So if that happens over here, then this will give you another opportunity to go short. That's if it does happen, right? If it doesn't happen, we may see price, if it doesn't happen, we may see price dump all the way to these support levels, right, before we get maybe a good bounce, then followed by a continuation or a massive bounce to the upside, then for a dump. So that's it briefly for crude oil. Right now it's a game of patience, so I don't see any reason why you want to go short at current price levels, because it makes no sense to go short. If you missed the opportunity to go short over here, then you have to be extra careful, more patient, to wait for another good opportunity to go short or to go long. So I'm watching out for this area of value. So I'm just going to put this out here. I'm watching out for this area of value, which is a very good area of support. And I do think if we get price dumping into this area of value, then that could lead to a good bounce or a relief rally before we go down in continuation of the overall trend, or get a bounce all the way to new highs. But right now, all highs on this area of value, and we watch out to see if we get a bounce or a breakout from that level for us to decide what's going to happen next. But in summary, what we should be watching out for on crude oil would be, price coming to this area of value or this close to this area of value, see how price reacts to it, then think about the next possible course of action based off of price action. Lastly, we're talking about Nasdaq. So Nasdaq US 500 is a 6 hours chart. So the reason I'm using a 6 hour chart is because we have something interesting happening on this time frame, right? So moving average again, 200 EMA and SMA gives us a clean area of support. We had a very good bounce over here. So on the 6 hours time frame, we had a very good bounce of this area of value, right, which led to massive price movement to the upside. Right now, we can see price visiting this moving average again. So now the question is it going to hold support, right, for a bounce to the upside in continuation of the bullish trend, or are we going to consolidate a little and lose the support aiming for this trend line over here, right, before we see our bounce? So that's something to pay attention to. For me, I'm going to watch out to see how price reacts to this area of value. You can see this area of value moving average also coincides with an area of former area of resistance, so resistance can turn into support. So there's a good chance this area of value turns to support right now in line with the moving average, and we also have an oversold level on the RSI. But that notwithstanding, we have to see what happens when the market opens. The market could open with a gap. So if the market opens with a gap, let's say from these price levels, then I would want to see price coming into this trend line where I'm going to look for opportunities to go long in continuation of the trend, because I don't think this dump is going to last forever, right? So if we don't open with a gap, I'm going to go down to the lower time frame, let's say 2 hours time frame, see how price reacts to these levels. So maybe price gets a weak, consolidate, and if we do get a good bounce, I'm going to go long in continuation of the trend. Stop loss is going to place underneath the wick or underneath the bounce of the area of value, and my take entry is going to be placed around the bounce. First taper target is going to be placed around these highs, obviously, and I trade the rest of my positions as we go higher. So it's a game of risk to reward, right? Now, these price levels over here is a very good opportunity to go long because we have multiple confluences. One area of value, resistance level potentially turning to support. We have RSI being oversold, and on the 6 hours time frame, it coincides with long-term moving averages, right? The 200 EMA SMA, which has acted as a support before and could possibly act as a support again over here, right? So that's it briefly for this week's analysis. All I'm focusing on right now on Nasdaq is a bounce, right, to go long with a tight stop loss, good risk to reward ratio, and then I'll be focusing on gold. So these are the two trade instruments I'm going to be focusing on this week. So gold and Nasdaq, possibly maybe US 30 if there's an opportunity there, or US 500. So just watch out for those moving averages on multiple time frames to see which time frame is holding a moving average quite nicely, and watch out for those bounces and consolidations, and then just simply go long. Remember, I always trade with good risk management. That's what's going to save you in times of horrors. like what happened last week in the crypto market. So if you have questions, guys, leave them in the comment section down below. If you agree with me or disagree with me, also leave them in the comment section down below. I'll do it to respond as swiftly as I can. That's it from me, guys, this week. See you next week.